We're witnessing complete and total financial history being written right in front of us right now. What's happening right now over the last 48 hours is we've seen a first of its kind, or the first of our generation, a run on a bank, a major bank in the form of Silicon Valley Bank, a top 20 bank in the United States. This is, of course, where most of the Silicon Valley startups are doing their banking infrastructure. So in Silicon Valley right now, things are DEFCON 1. Things are completely it's in complete free fall. Tons of companies will not be able to make payroll. Tons of people will not be able to access their funds. Now, this all started, let's talk about this, because we're going to talk about, one, what the heck is going on, two, what the net results are going to be short term, and three, what I think are strategies to protect yourself on a personal level, on a business level. But finally, what I think is going to happen as a result of this, okay? So one, what's happening right now? We're seeing the entire banking sector, not just crypto stuff, but the entire banking sector under an extreme stress test. The reason for this is very simple. Over the last several years, banks have been buying bonds, essentially with zero interest rates and free money being chucked into the economy. All the banks were taking all the money and chucking it into bonds to earn some yield. So all the deposits they were receiving, they were putting into the bond market. Well, what happened when they started raising rates aggressively is actually we got the stock bond correlation where both stocks and bonds started falling in unison. What's going on right now? Effectively understand this. Tons of banks all around the United States and the Western world are sitting on unrealized losses from these bond purchases. Those bonds have completely sunk in value, but they didn't have to sell those bonds until there's a run on the bank. So what happened over the last few days is that there's been runs on the bank. It started with Silvergate Bank, and this was partially because we got a tweet from a senator, Elizabeth Warren, claiming that the bank was insolvent, and that caused a run on the bank in Silvergate Bank. Of course, there were ties to FTX and all that stuff, but being completely honest, this is an absolutely insane thing for a senator to do, for any politician to do, to push for a run on a bank and then claim that this is crypto's fault. It's absolutely unthinkable. But that's what happened. So you're having that happen over there at Silvergate. Now we're seeing something similar happen at Silicon Valley Bank, which has nothing to do with crypto. This is not a crypto bank, right? And so what we're seeing now is other banks start to show weakness. And all of a sudden, yesterday, the financial sector woke up to the fact that there are tons of banks all around that are sitting on huge losses from their acquisitions of bonds. So remember, people put money in the bank buys bonds. And that was the way that they processed most of their transactions for a significant amount of time. Now, all the banks know that they're down on these purchases, but they don't really have to realize the losses. They don't have to sell at a loss. Think of it as selling at a loss until enough people request to get their money out. So that run on the bank forces them to then lose the money officially. It's gone now, and those losses are what's called crystallized. So that's what's happening right now, is that Silicon Valley Bank was forced to crystallize a ton of losses to process withdrawals. It happened at Silvergate Bank as well. So Silvergate Bank got liquidated, and right now we're not sure what's going to happen with Silicon Valley Bank because it's a much larger bank. $169 billion was the figure that I heard. I believe it's over 160 billion, and it's the 18th biggest bank in the United States. Now, this is a huge problem for all the tech world. I don't bank, or none of my companies bank with Silicon Valley Bank. But let's talk right now about ways that if you are a business owner or a person in just anyone, right? Specifically in the United States, how you can keep your money safe right now in this situation, right? The number one, least risky way, I believe, from my understanding, again, I'm not an expert in this, but buying U.S. short duration T-bills is effectively a way that you can have your money with the government. You have your money essentially being owed to you by the government. There's no limit on that insurance or protection, effectively, unless the government defaults, right? Unless the government defaults and the United States government doesn't print money and pay back its debts like it has throughout the entirety of history, your money is still owed to you. It is not inside of a single bank that is doing fractional reserve banking. That's not where your money is anymore if you've bought T-bills. So I've been employing the T-bill strategy here for just because the rates are so good, you're earning over 5% just letting your money sit there. It's not too bad, right? And so what I think is the next step here is, essentially, so that's what's happening right now. You're having runs on the bank because all these banks bought bonds during a different sort of interest rate phenomena during a different economic cycle. And now things are going badly, and as they need to process withdrawals, they actually are showing losses on their bond purchases. Might seem complex, but this is where it gets really interesting, okay? So what happens now, essentially the issue is that there's not enough people buying bonds. And when more people buy bonds, that would normalize this process. That would essentially fix the issue. But structurally, that's a lot of money that needs to be bought. But what happens if a ton of banks start to fail? You get civil unrest, you get effectively protests, and you get demands for the government to bail out the banks once again. However, I believe the way that they're going to do it, and remember, we've said all throughout 2022, something will have to break for the Fed to really jump in and do something differently. Something has to break. To me, banks failing is something breaking. It's the biggest possible thing that you could see break, right? So if we see these banks fail, like it looks like these are smaller banks, right? 18 out of whatever. This isn't, your top 5 banks, but still, this is a huge problem, right? A huge problem, the biggest bank failure since the Great Recession. Okay. So if this continues, what I expect to see happen is the government will start to print money to buy the bonds, right? So they'll do what's called yield curve control, or they'll start buying their own debt, right? And that's circular, and it creates a huge inflation problem. But effectively, this is something that I believe will be the only it's tricky, right? Because it's going to hurt inflation. It's going to send inflation higher. But if they start doing this, so as much as like what's happening right now is going to cause a huge panic and something looks like everything could be going miserably wrong, my belief is that the government will try to fix this at a certain point. They're not just going to let every single bank fail, right? That doesn't make sense, right? You end up ruining the country. So in my opinion, what will happen and what people should be looking for is looking for the pivot where the government starts to intervene. Anytime, any type of intervention into this process could cause massive amounts of new investment and shifting back to a risk on climate. Think of what happened in the COVID crash of March 2020 crash. Everyone thought everything was going to zero. The government stepped in with essentially an infinite amount of money, and all of a sudden everything had the biggest, most insane wet and wild bull run of all time. Now, I don't know exactly what's going to happen in what proportions, but I do believe that I've outlined a few really, really important things here, which is one, what happened? We've seen the bank runs. We're understanding, why do the banks not have the money? Well, they invested in bonds. Those bonds are at a loss. Now, when they try to sell those bonds to recoup some money, there's not enough. There's not enough money there because they've lost so much on the bond purchases. That's happening systemically across the Western world, okay? So this is a big deal, right? This is current today at Silicon Valley Bank. We don't know which other banks are in trouble, and I'm not really an expert in that, but I'm just explaining to you what I understand happened at Silicon Valley Bank. Now, the second thing I talked about is a strategy, which is if you have cash in a bank account, I highly suggest, or at least I understand, I'm not a financial advisor here, but I believe the best, safest thing to do here is to have your money in T-bills, because that's a direct IOU from the government. It's not from a bank, and banks can go under. Again, we do not expect the government to go under from this. No, they'll be forced with a choice to print or let something bad happen. And in my opinion, they will choose to print because that is much worse than the alternative, or much better than the alternative. So what this means is that this will cause more structural inflation. However, it should create a huge, massive surge in asset prices, of course, like Bitcoin and S&P 500 and all the other stuff we saw, right? So understand, that's the moment we're in, is that something is breaking. And it's the bond market this time. Back in 2008, it was the subprime mortgage segment. Now, or subprime credit segment. Even though I have some interesting data about that, which we'll show on a video. It wasn't appropriate to publish today. And this time it is the sovereign debt, right? And so we will see what happens next. But I believe that if this continues to be widespread, that we'll see the government intervene. And when the government intervenes, this will lead to, or in the moments leading up to the government intervening, we could see prices go into free fall on Bitcoin, S&P 500, everything. True panic. And that is where you'd expect some government intervention, much like what we saw in March 2020. I don't know how bad it's going to get. So I'm not saying, hey, here's a price target, nothing. I'm saying, here's my general mental mapping for the next few weeks, months. I'm just going to be watching this, keeping a lot of money in T-bills, and understanding that there's all kinds of systemic risk, not just in crypto, right? I can't believe a senator would tweet to cause a bank run of a bank. Now we're seeing that it has nothing to do with crypto. There's tons of banks all around the United States that are in true danger. And it feels like a little bit of misdirection that's been going on, trying to focus and make crypto this big bad actor, when in reality, the issue that we're seeing is, essentially mismanagement of from the Fed. The Fed can't win this. They either need to let banks fail, a situation that they created with their easy money to hard money policies, or they need to print and create more inflation, which goes against everything that they've been trying to do. They don't really have an easy W here. But I do think that there's a way that you can understand this and make sure that you're not in jeopardy, your family's not in jeopardy. And that's the best you can do right now. Spread knowledge about T-bills, spread knowledge about where the risk is in the banking sector, how to protect yourself from it. Make sure that you know where your cash is. Is your cash just sitting in a traditional banking checking account? Is it in a savings account? Or is it in a money market, a T-bill? Understand where your money is and understand how to protect yourself from potential devastating outcomes that are currently on the table right now. Like with Silicon Valley Bank, where people don't know if they're going to have access, these companies don't know if they're going to have access to any of their money. I wish this was not a dramatization. I wish this was a dramatization. I wish I was being dramatic here. I'm not. This is what's going on. We were expecting something to break. Something's breaking. Now we get to see how this plays out, right? And how it plays out, if you understand a few chess moves ahead, you can see where the risk is most likely going to start becoming where money flows back to if the government starts intervening and buying its own debt, because that becomes cyclical. It's like what they did in Japan. It creates huge inflation. So when we see that, that's when the bat signal will be to jump fully back in to Bitcoin, Ethereum, and that kind of stuff, S&P, and just understand that this is a structural economic issue that Bitcoin was literally designed to hedge against. So here we are. It's game two. After the Great Recession, and things are starting to really break. So it's crazy. I'll be here each and every day. I hope this video is helping you, and I hope my coverage over the last few months, being extremely cautious of this bear market rally, trying to preach slow, steady, unemotional, very, very measured and risk-adjusted approaches to this market has been helpful to you. As always, I'm Elliot Trades, and I'll see you very soon on the next one. I'll be keeping you up to date as much as I can. Peace.